Today we're going to pull the curtain back on what it is that private equity buyers actually want, so let's dive into it. I'm Scott Duke, this is the Happy Dealmaker channel, and on this channel we empower small business entrepreneurs to build companies that are sellable. If that sounds like it would be something of value to you, don't forget, like and subscribe. All right, today I was thinking about what I could do as an episode, and I was cruising through my email, and what I found was all these emails that I get every single week from private equity companies, there is consistencies that run across all of them. So I was gonna show you guys a couple of those emails, and then we'll pull out exactly what private equity companies are looking for, so you know if you're wanting to sell to private equity, what you need to do in your company, and how you should set it up so you can be attractive to them. So let's go over to some of these emails and take a look. All right, so mostly these emails come in, they're brief, they're short, they're succinct, they're to the point, which I actually really like, and it just tells you the exact things that the PE companies are looking for. So for instance, in this email, it just comes through, looking for EBITDA of 1 million to 5 million, location in the US, and the industry is looking for industrial services, and that's it. So if this is a match, boom, you know that you can communicate with this person and away you go. But it's very specific of what they're looking for, which you'll find with private equity firms. So let's look at another one. So this next one comes through, and it actually is even nicer. It breaks down exactly what they're looking for from financial criteria. So 3 years of stable revenues and profitability, 2 million of EBITDA, attractive margins, like shocker, right? And low annual capital expenditures. So after they purchase it, they don't want to put a lot of money into it, and they're looking for attractive margins and that recurring revenue that's coming in around that $3 million or $2 million a year mark. They're looking for a motivated seller, modest barriers to entry on the company, diverse, loyal customer base, and they highlight the sectors that they would potentially purchase in. So you'll find with private equity, they're usually pretty specific about the areas that they're targeting as far as industry and company type, because they're usually specialized, right? All right, this next one, it looks like below are some of my criteria. So here they're looking to purchase in Canada and British Columbia. Recurring revenue pops up again. 3 years of profitability and positive cash flow, so they want to make sure the company's stable and has been for the last 3 years. Looking for a seller that's wants retirement and exit for personal reasons. So right here, they're probably looking for a seller that has some kind of urgency. And EBITDA range from 500,000 to 3 million, so a little bit lower than the previous one. All right, what's next? All right, these guys, it isn't broken down as cleanly, but they're looking for a business with 10 to 100 million dollars in annual revenue, 2 to 20 million dollars of cash flow, so that's your EBITDA number, and margins over 15%. So definitely people that are looking for very cash oriented, you'll find with private equity firms, they're really just looking for that recurring revenue as a big part of their investment strategy. All right, what else do we got? Okay, this email is interesting because it doesn't talk about, normally it's very bizarre to not have an EBITDA number in these emails, but this one's saying demonstrate consistent track record of earnings. All right, that's been consistent across all of them. Business selling products or services required or needed repeatedly. Okay, so this is, again, they're nailing on their recurring thing. They want recurring revenue, and they want to know those products are constantly going to be bought over and over again. Think toothpaste or bricks. Industry preference is service or manufacturing, so they're like zeroing down on the industry. The geographical focus is Canada, and the type of investment is partial investment or full buyout. So interesting, we don't have EBITDA numbers here. So this investment group is looking specifically for that recurring revenue piece, pretty much at any size it looks like. All right, let's grab another one here. Okay, so this one breaks it down to a chart, which is amazing. So they're looking for 3 years of stable revenue, 2 to 5 million dollars in EBITDA, attractive margins comes up again, and low annual capital expenditure, motivation from a seller, and they've broken down their target segment. All right, we'll do one more, and I think you guys are gonna get the picture here of what private equity firms are looking for. Okay, here's one. They're looking for in the niche of distribution or software business, so that's the target market they're looking for, over $1.5 million in EBITDA, and they're giving some background here on who their financiers are, so they're showing that they have the capacity to actually purchase. Okay, so I think we looked at like 6 emails right there. So let's actually, I wrote down on our whiteboard here what the commonalities are across the board for those of you that are thinking about selling your business to private equity. Okay, so this is what we got out of that. So $500 to $10 million in EBITDA. And again, the market that I operate in is this market. So as far as like private equity goes, the sky is pretty much the limit. But people that are going to be emailing me are going to be emailing me in this range. So there's some bias there, I suppose. But either way, that was consistent, right? They're looking for 3 years of profitable cash flow. That came across through a bunch of emails. This recurring and repeat revenue. This came up in pretty much every single email that I just showed you. Marker's pretty poor. Grab another marker. Yeah, so this recurring and repeat revenue was huge, right? Attractive margins. They're looking for margins that are probably higher than average. In the emails we saw some margins they're looking for 15%, but you're definitely like private equity is going to be looking for over 10% when they're looking at businesses. Loyal customer base. So they wanted that, again, they want that repeat recurring revenue or a product line that is going to be purchased over and over and over again. Strong management came up. One of them was a growing industry that they want to see things that are going to be, you know, the future is better than the present, and modest barriers to entry was one of the other ones. So it's not the modest barriers to entry they're talking about there. They want it a little bit of a barrier to entry so that it's going to be difficult for other competitors to come in and take over. Okay, well, interesting, right? So that's real life. That is emails that are landing in my inbox that are private equity firms that are looking to buy companies. And this is the consistency that was across all of those emails. So if that was valuable to you guys, don't forget, like and subscribe. I put a video like this out every single Tuesday and Thursday. Don't forget, every business is sellable, and we'll see you in the next video.